Hey everybody, good to be here today. My name's Brent Moores. I'm sitting in for Cameron May, who's out today on some PTO, but I'm glad to be with you. And I'm glad to be joined by Kevin Horner, who, by the way, if you're not aware, probably most of you are, he teaches our Trader Talks session each morning at 9:30 Eastern Time, each morning except Tuesday. So Monday, Wednesday, Thursday, Friday. And highly recommend you start your day off with that. But you can follow either of us on X at Brentmore CS at Kevin Horner CS. And hey, familiar names in the chat, glad you're here. Remember, the material today is intended for general informational and educational purposes only. It's not an individual recommendation or personalized investment advice. There are risks associated with investing in dividend stocks, including but not limited to the risk that stocks may reduce or stop paying dividends. We see that. We've seen that a lot. That happens. Particularly if a company's in financial trouble, they may cut that dividend, may stop paying the dividend entirely. It doesn't mean all is done for the company necessarily, but that's a different topic. But right now, just know that there are risks here with dividend-paying stocks. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is provided for educational purposes only. And all investing involves risks, including loss of principal. Past performance is no guarantee of future results. And diversification does not ensure a profit and does not protect against losses in declining markets. Okay, so here's what I want to do today. I want to, first of all, what I'm going to do is I'm going to bring up the schwab.com website. I'll be using both schwab.com and the Thinkorswim platform today. Here's Schwab. But before we get too far into this, I want to talk about fundamental analysis and technical analysis, some of the difference in what we typically do in this webcast. In this webcast, unlike many of us, these webcasts, for example, Trader Talks, where we tend to typically focus on maybe shorter term trading approaches to the market. In this webcast, we typically focus on longer term investing. That's typically what we do with dividend investing. You're not trying to capture a dividend for a week and then exit the stock. That's typically not the process we do. So typically, longer term investors focus more on fundamental analysis, and you see we do this each week in this webcast. Shorter term investors often focus more on technical analysis, but it's not always clear cut. Maybe there's a line, a blurry line, there's not a fine line between the two. Sometimes you can use, some shorter term traders may look at the fundamentals of a stock. Some longer term investors may look at the technicals of a stock. And that's what I want to do today. I want to say, hey, we're going to do what we do typically in this webcast, and that is look at fundamentals, but we're also going to add in a technical element, a longer term technical element. And what do I mean by a longer term technical element? I'm not talking about looking at, say, an RSI, short term, a MACD, a stochastic, a short term, a 20-day moving average, a 10-day moving average, a whole moving average. We're not using those today. But we are going to bring in some technical analysis into our longer term dividend investing approach. So some traders do this, some traders don't. That's absolutely fine. What kinds of things would we look at, though, if we were to use a longer term technical approach? Well, we may look at things like the long term trend. Okay, that would certainly be something a longer term technician may do. Now, sometimes in this webcast, we've talked about doing value investing or finding stocks that have been beaten up. And those stocks are probably not in an upward trend long term. Okay, so that wouldn't work. But in this case, that's not what we're talking about. We may look at things such as relative strength. Okay. How is the stock done relative strength wise? In other words, compared to, say, the market as a whole or its industry group or something like that. That's relative strength. Or you may look for at long-term support levels. Okay. Support, well, I'll say support and resistance. Okay. So those are all kind of things that we could possibly do here in terms of the technical, if you do decide to add in that technical element to our fundamental analysis. Now, what I want to do though is I want to start with the basics of what we normally do. I'm going to go to Learn. I'm going to go to Courses. This is schwab.com. Learn Courses, and it brings up courses. And I'm going to go down to the income investing course. Are you guys familiar with this? A lot of you are, some of you probably not. If you click on that income investing course, it gives you different topics, including dividend stocks. You can go through at your own pace. You can skip around areas that you want, that maybe you already know some areas and you skip through those or skim those or whatnot. And it's good info in these. Dividend stock analysis, okay? Bonds. No, we're not talking about bonds today, but just I want you to be aware of it. It's there. REITs, not the subject for today, but good information on REITs there if you're interested. But in it, it also has income investing sample plans. And I'm going to click on this, and I'm going to go up, and the first plan here, after the disclosures, are this dividend stocks sample investing plan. Now, this is what it says it is. It's a sample, okay? It's not a recommendation that you follow these rules necessarily, but I think it gives you some good principles. Furthermore, no matter what type of investing you do, whether you're doing short-term technicals, options, this, that, whatever, a plan of some sort, I think, makes sense. It would probably look very different than this plan, but a plan of some sort makes sense. For a dividend investing plan, well, you probably, these are some pretty typical type things that people would use. And for the most part, I'm going to use similar stuff to this. And you'll see this as we go through this. But I'm going to take this, but one thing you look at this, you're going to say, there's no technical analysis. Well, we just went through that. Typically, longer term investing, we're not focusing on technical analysis, but I'm going to add in some technical analysis. A little bit, not a ton, longer term technical analysis, not short term, but that's what we're going to do here, okay? So, but let's just kind of quickly look at just a few of these things here, okay? A dividend yield greater than the benchmark, okay? That's probably kind of like a no-brainer if you're a dividend investor. Like the S&P 500 dividend yield right now is roughly, I don't know exactly what it is, it's roughly 1% right now. That's pretty low in terms of if you're focusing on dividend stocks. Doesn't mean those stocks are good or bad or better or worse. It just means they're not paying much of a dividend if you're not getting at least what the S&P 500 is paying. And so I probably wouldn't consider dividend investing at that point for if that's kind of the goal there. So we're going to add in some sort of parameter, criterion regarding the yield, okay? A stock that's been raising its dividend, okay? Here it suggests over the last 5 years. You can, choose a time frame, but a stock that's raising its dividend is certainly something that would be fairly typical. Paul said a yield greater than inflation. Yeah, that I'd certainly, absolutely. I think that would make absolute sense to do something like that. Okay, Barbara Hicks says define benchmark. Let's see, greater than a benchmark. A benchmark is just a standard you're going to compare it to. Very often, probably more often than not, we look at things like the S&P 500 as the benchmark, as the standard we're going to compare it to. But you can compare it to something else. Now, for dividends, we probably wouldn't use something like the NASDAQ as your benchmark because that's typically you don't have as many dividend paying stocks in NASDAQ. So in that case, the benchmark is that it. Could you use something like a dividend index as a benchmark? Yes, you could. Of course, that's going to have probably a higher yield than the S&P 500 to start. And so, maybe it would be at least equal to the benchmark if you use a dividend benchmark. So good question there, Barbara. The benchmark or standard we use depends on the topic at hand, but in this case, we're going to stick with the S&P 500 as kind of on this plan is what it says, but you can use something higher. Hey, Paul's using the inflation rate as a benchmark here in a sense. So in terms of what he chatted in there. So I know that, so those of you who watch on our recording can't see the chat. Let's move on. A payout ratio, okay, below a certain threshold. Now this is saying a 5-year average payout ratio. Maybe you don't look back 5 years, maybe you do. And this says 40%, which isn't really that high, to be honest. A lot of traders would say 60 or 70% would be the payout ratio. What's a payout ratio? It's just how much the company is paying out in terms of the dividend, in the dividend versus how much money they bring in terms of earnings. So if you had a 100% payout ratio, that would mean they're paying out all their earnings in the form of a dividend. Well, that's probably too much, right? For a long-term sustained health of the company. You don't want to pay out every penny you're making in earnings to the shareholders in terms of a dividend, because then you don't have money for, capital improvements or other stuff like that. Capital investments, stuff like that. So 40%, that's probably a little lower than a lot of traders will look at. And we may tweak that a little bit when we actually look at a scan. Return on equity above a certain level, such as 10%. 10% isn't huge, but we're not growth investing here. If this was a growth plan, we'd probably do something higher, 20% maybe, 25% maybe, something like that. But we're just trying to find a company that is healthy beyond the dividend. Remember, we're not just investing in stocks just for the dividend. We want a healthy company because healthy companies can potentially continue to pay out dividends in the future, okay? And Paul mentioned REITs going to have a high payout ratio. Yeah, REITs have to pay out 90% basically in terms of their payout ratio by law. And so they are going to be higher there. But for our purposes, we don't want anything near 90% there. Debt to equity ratio. We don't want a company to have too much debt. Now, there's different variations of debt to equity or debt to capital some traders will use. And in this case, it says the company has at least $1 of assets to $1 of debt. Whereas I mentioned the payout ratio may be a little strict there in saying it needs to be 40% or less. This may be a little bit loose. I think 100% debt to equity, a lot of traders may find that too generous there in terms of what the level is there. Now, PE ratio 10 to 30, just kind of not super high, but that's all we're going for on a PE ratio. So those are just kind of a starting point, if you will. Now, Barbara mentioned in the chat something like, how much do these differ by industry group? These do differ by industry group. Hey, look, if we're looking at, say, IT stocks, you're probably, or semiconductors, will go even a little more specific than IT in general. You're probably less likely to find a dividend yield. Not that many are going to be dividend investments, probably. They're not bad stocks necessarily. It's just that they're not dividend type stocks. So these things will vary by sector or industry group. And what you can do is, if you like, and what often we show and recommend is you compare it to its peers. in the same industry group and use that. Is that a potential benchmark there? Going back to the benchmark idea, your industry group yield, your industry group PE, your industry group ROE or debt. Yes, you can certainly use that as a benchmark for any of these, and that's great. And you can get those on using the peer comparison on the Schwab website. And I want to go to the Schwab website now and do that. But we're going to add just a little bit to this. We're going to add a few technical parameters here. Okay. And so what I'm going to say is, for long-term trend, something we may look at, I'm going to say maybe we look for something, and this is again just as an example, above greater than its 200-day moving average. Now, the 200-day moving average, typically that would be a simple moving average probably. The 200-day moving average, that's a long-term moving average, okay? By most people's definition, that's a long-term moving average. But we can go a little shorter term. Maybe we say something like the 50-day is above the 200-day moving average. That's maybe brings it a little bit more into the intermediate term, long to intermediate term scale here, but we don't really want to go short term. We're not going to do anything with a 20 or 30-day moving average here on this. Another thing that we could possibly look at is we could say the relative strength. I mentioned this earlier. The relative strength of whatever stock we're looking at is greater than the S&P 500 over the past year or some time frame like that. In other words, it's outperformed the S&P 500 over the past year. Our goal isn't super high momentum growth type stocks. That's not the goal here. But if we're going to add in technical analysis, these may be some parameters as well. So the 50 above the 200-day across that'd be a golden cross. Yeah, Paul mentioned a golden cross. For those of you who aren't familiar with that, that would be a golden cross. Now, technically, when we talk about the golden cross, it'd be the 50 crossing above the 200, and you can look for that. But what I'm kind of getting at here isn't necessarily it crossing above right now. I'm just saying it's above it already. Maybe that occurred a couple days ago. Maybe that occurred a couple months ago or more, or something like that. That's okay for what we're looking at. So these are just general ideas to start with. But let's do this. Let's go back to our Schwab.com website, and let's just build a scan for this, incorporating both the fundamentals and the technicals together. So I'm going to go to research. I'm going to go to stocks. I'm going to go to stock screener, and we're going to create a scan here. Okay, so we're going to start and we're going to create a scan here. Now, one thing that I'll often do is I'll just kind of limit these to the S&P 500. You don't have to do that, but it's just something I do often. It gives you larger companies. S&P 500 are the 500, essentially the 500 largest companies by market cap. And so I'm going to click on that and notice, there we go. So 500. That's not limiting it much, but that's the starting point. Now, we mentioned the yield. We mentioned above the S&P 500. I'm going to go a little bit beyond that, and I'm going to go to dividends, and I'm going to go to yield, annual dividend yield, okay? And what I'm going to say here on this one is I'm going to say between 2%, which would be about double the S&P 500, up to, we'll say 6%. So I'm just going to check these three boxes, 2 to 3%, plus 3 to 4%, plus 4 to 6%. I'm staying away from the super high yield companies. That often implies a little bit more risk, okay? When we chase those yields that are super high, often that can imply more risk. These are still potentially some healthy yields, some pretty big yields, but we'll say minimum 2% on this. Now you can see we've narrowed down the list. Okay, if we're to run it right now, 181 matches, that's still more than I want to go through, So we're going to add some of these other parameters, and I'll go a little faster on some of these here. But what I want to do is I want to look at a dividend growth rate. We mentioned a healthy company, a healthy dividend stock is typically growing its dividends. So I'm going to say, we'll just say 5% or more. I'm just going to click on all these boxes, 5% to 15%, 15% to 25, and so on. And so we have a dividend. We have a dividend that's growing. We don't want that dividend to be too much, though, compared to the earnings. So I'm going to go to the payout ratio. Okay. So here's the payout ratio. So I'm going to go and pull payout ratio less than 60%. I'm just going to click on these. All right. There we go. Now let's go to ROE. So I'm going to go down, and that's going to be on financial strength, I think. Yeah, return on equity. We're going to go here, and I'm going to say at least 10% or more. Okay, there we go. And we're going to do debt to equity, and we're going to go debt to equity. Now, this is kind of a one that I want to just point out. The levels on here are kind of high levels, but they're a different scale than you may be used to. Often we'll talk about it as like 50% or 70% or something like this. When you talk about debt to equity, this less than 1 would equal 100%. So if we want to get a little bit more granular on that, you can just click on enter specific values, and we could say less than or equal to 0.5. Oops, 0.5. Okay, there we go. So now we're narrowing it down. And I got one more. I've got a PE ratio, which is going to be under valuation, PE ratio, and I'm going to go PE ratio trailing 12 months. We're going to go 10 to 30. Now let's add in technical parameters. These are our fundamental parameters. Let's add in our technical parameters here. So here's the technicals. Okay, here's the technicals. And we said, maybe a long-term moving average. So I'm going to say price distance above simple moving average, 200-day moving average. We're going long-term here. And we're going to say, I don't care if it's just above or moderately above or far above. We're just going to say we want it to be above the moving average. So the 200-day moving average. So I checked them all there. That's a technical parameter. Now, to someone else's comment earlier, Paul's comment earlier, on the cross, you want to do the golden cross? You could do that. Let me click on this for a sec. But there's actually going to be, let's see, it's actually still giving, oh wait, bullish. Well, I got to click bullish. It gives me 0 results because this is, and I'm not sure what the time frame on this is, to be honest, how long it looks back for the cross. But I get the feeling that a lot of stocks, the 50 crossed above the 200 quite a while ago. So maybe, so that's why it may not be showing up. So I'm actually going to take that one off there. So we're above the 200-day moving average. You can also say, I want my relative strength. There's relative strength somewhere. Let me just see where's, I think it's under price performance. Performance versus S&P 500, last 12 months. So here you can add in a relative strength parameter, okay? And we could say, look, I don't care. I just want it to be outperforming. It doesn't need to be super outperforming, just outperforming. So I'm going to check all these. And then we can view our matches here on this. Okay, so we've got 3 stocks here on this. And I'm just going to write these down real quickly. MTB, okay, PFG, and SNA. Okay, so there's 3 stocks. And we can look at these, and we'll probably look at least one of them or 2 of them later in here. But I also want to show you that you may need to adjust the parameters a little bit when you are on the Thinkorswim platform. So if you're on the stock hacker on Thinkorswim, let me just clear my filters out here. Oops, clicked on the wrong thing. So here's a Thinkorswim desktop software. Hold on one sec. We're going to remove our filters. And I'm not going to do S&P 100. I'm going to do, like I did before, I'm going to go to the S&P 500, which is going to be right here, S&P 500. And I'm going to do yield. I'm going to add in some of these parameters. So to add a parameter on here, I'm going to go to Add Filter. I'm going to go to Fundamental. And I'm going to go down to Dividend Yield. And I'm going to just say the current yield is between 2% and 6%. So there's going to be a lot of overlap. But what we're going to see here as we look at these is that there's some parameters that aren't the same here. They're not available on here. And some of them we'd enter in a little bit differently. I'm going to add in a fundamental filter. I'm going to pull a dividend payout. And in this, instead of putting 0.5 or whatever, or 0.6, I'm going to put in 60, because this goes by percentage here. So this is a little different in that regard. Oops, I didn't mean to do that. Let me get rid of that. And let me just delete that out. There we go. And then what we can do is we can keep on going. Now, there's no just pure debt to equity you're going to see on here. It's listed a little bit differently. And in fact, what I'm going to do here is, just to save time on this, I'm going to go, I actually have a scan saved. And so I'll actually share this scan with you. But I'm going to load a scan query. But that's how you go and you build it. And I'll go through these here. I have with a long-term technical filter. So let's do this. Let's look at this and just kind of look. We did S&P 500. I show you how to add that. We did yield. I did at least 2% on this. Payout ratio, dividend payout. I said at least 60%. Okay. Long-term debt to capital. So again, it's a fundamental parameter. It's not under the D's, it's under L's, long-term debt to capital. And we said maximum 50% on that. Return on equity. Return on equity, minimum 10. Price to earnings ratio, minimum 10, maximum 30. Now, if you just want something to be a minimum and not a maximum, you don't care how high it goes, you can just leave that blank. That's how that works. Now, there is no, here's one of the differences between the Schwab.com website and the Thinkorswim software. There's no dividend growth rate 5 years or dividend growth rate 3 years on this. So I tweaked it a little bit. I just said, hey, year over year, I want it to be going up at least 5%. Okay, so we may get some different results on this as we do this search. I have 2 study filters on here. Now, study filters only work in your live platform, not paper money. Okay, not paper money. The moving average scan, the close is at least, I just put 1% above. So how do you add this? You just click on Add Filter. You add Study Filter. It comes down here. It's going to default to ADX crossover. It's just alphabetical. It starts with that. And then you can click on Custom. You can delete that, add a condition. And we said we want the 50-day moving average. So I'm going to start with the study. I'm going to go to a simple moving average. I'm going to add that. I'm going to change the length from 9 to 50, and I want it to be greater than the simple moving average, the 200-day simple moving average. So I'm going to go simple moving average. I'm going to make that 200, and then you'd save that, okay? So that's how you can add that on there if you want. I already did that. That's what we have right here. And I added another one where that's a simple moving average above the 200-day. I actually confused the two. This one's, what I just showed you is this one, okay? And moving average scan, basically this is a study filter. It's under like, I think popular studies, moving average scan, okay? And on that one, I'm just gonna delete this last one we added in. I just said it's above, I just put 1% above the 200-day moving average. So that's adding those technical parameters that we added in before. I'm gonna run our scan and we come up with results. We got 6 results here on this, okay? So this is the scan. I'll share this scan with you if you like. Let me share my scan query. Dividends with long-term technicals. Okay, let me share that. Click on this. And I'm going to throw that scan in the chat for those of you watching live. For those of you watching on a recording, what I will do is I'll just paste it right here. And you can just, that's an exclamation point, KZSAUQNI, and the case matters. So you got to do caps on that if you want. Okay. So now, you can change the columns here on here. And if you want this, you can just pause the recording if you're watching on a recording. And because I'm going to shrink this down just so you can see it a little bit better. Okay. So here we go. Now, you can add the parameters on here if you want. Let me just click on my gear and I'm going to customize and I'm going to put on, I don't really care about bid or ask or high or low, but what I do care about is I care about the yield, okay? I care about, well, let's just also look at this. Let's look at the sector and just kind of get an idea of the sector that these are in, okay? So here's my yields, okay? 2.8, 2.7, 2.6, 2.1, 3.4, and 2.5. We've got an IT, 2 energy, 2 financials, and industrial. So it's spread up at different sectors. So here you go. And these are mostly, because we did S&P 500, these are going to be companies that are probably familiar to you. Now, notice our list is slightly different. This list was slightly different and than the one we had on the Schwab.com website. There was some overlap. Why the difference? Well, some of the parameters were slightly different, okay? And notice we didn't do the relative strength one on here. Well, there wasn't a relative strength over the past year parameter on here. It's possible we could have built one up through a study, but so I had to change it. But the point is, go with parameters that are generally get after the types of stocks you're going to look at, because you're going to look at those stocks anyway. You're going to need to look at them anyway in more depth. And then you can compare them to your industry group if you like. We did have some overlap. I see Snap-on was overlap there on that. Principal Financial came up on both lists. And MTB was not on this list. So these last two were common on both of those. So maybe we'll take a look at those, okay? So let's go and let me go back to the Schwab.com website. And here we go. I'm just going to click on Snap-on. Okay, we'll look at Snap-on here, and then you can just click right on this. And then when you look at it, what you can do is you can look at the chart here if you want. I actually kind of like those Thinkorswim charts. Here is SNA. Here's SNA. So this is what we've seen. This is over the past year. 50 is above, this is a 50-day moving average. This is a 200-day moving average. We're above the 200, 50 is above the 200. So there you go. Okay. So that's that. You can look at the longer term. You can also see the dividends over time. And we can do longer term than that. We can go, well, let's go 5 years. And you can see the dividend payments over time here on this one. Let me go back to my Schwab.com website. And if you want to look at the past dividends, you can see dividends there. You can also look here at dividends. And when on any of these areas, click on Show More, and you can see more on this. And you can see the dividends over time, dividend growth rate, payout ratio, and so on. And you can compare them to their peers. You can also compare to peers below too. And this is getting back to kind of Barbara's initial thought of comparing to, how things vary by industry here. Let me click on Show More. And you can look at the company, and you can look here under these different areas, including, let me just scroll down. Actually, I'm going the wrong way on this. If you go to index comparison, you can look at the company here. This is the company, Snap-on, versus the industry group it's in versus the S&P 500 as a whole. And you can look at things such as yield, about 2.5%, versus S&P versus industry and sector. You can compare those in this place as well there. So you can look at that. Now, you just need to be a little careful on this. Here's your ROE. So you got higher yield, you got lower ROE. Okay. Oh, actually, sorry, that's a different company. That's IDX there. Okay. So where were you? ROE, comparable ROE on those, higher yield on those. Doesn't mean it's going to do better. PE ratio, a little bit lower on those. Okay. So that's certainly one way to look at this. Now, when we look at companies, let me click on company comparison, then you can get some ideas. And sometimes what happens is you'll look at these and you'll say, hey, I like one of these others better than the one that I intended to see initially through the comparison there. And maybe it's lacking. It didn't come up on the initial one because it wasn't S&P 500 or something like that. Fair enough. You can do that. By the way, when you see these OTC, over-the-counter pink sheets, these are generally smaller. This would be a much more speculative, uncertain type investment whenever you see this. So a lot of investors decide, I'm just going to immediately exclude it if I see that OTC pink sheet information there on that. Okay. So, so let me go and let me just delete this, clear all drawings, and get out of here. Now, we have the list, and let me go back to our Thinkorswim platform. Let me go back to our scan. Now, look, if you don't want something with a 2% dividend, you only want 3% or more, well, we've got Principal Financial Group. That was actually on both lists there. So there's that. If you want something higher, you can look higher, but you're going to have to sacrifice something else on this list. We're not just seeking the highest dividend payer. We're seeking something that is good in a lot of different areas and pays, we'll say, a decent dividend here on this. Okay. And that's what we have right here on these. So So you can go through the same thing. Now, if you're looking on, let's look at PFG. If you're looking on the hold on, PFG. If you're looking on the, if you're looking at on the Thinkorswim platform, typically what you do to look at these, this is analyze. We're on fundamentals, okay? And here we go. So, and then what you can do is you can look at things like, typically on these, when we're looking, whether we're looking on the Schwab.com website or the Thinkorswim platform, we're looking for growth in some areas. Earnings growth. Doesn't need to be spectacular growth, okay? This one, I'm not sure what's up with that. That seems a complete anomaly there in 2002. But we're looking for generally earnings to be going up. Generally, what we want to see is cash flow to be going up, sales to be going up. Sometimes you'll have a blip in a year, but we want the general trend to be going up. ROE generally, and this is one's kind of all over the place here on this, to be honest. ROA actually been, it's kind of been up and down as well. Margins, you'd like those to be holding steady or improving over time here on these. So that's how you can certainly look at these. And so just here's the point. The point is, if we're going to start with something like the sample investing plan as just a starting point on this, that was our starting point. You can add to that. You can tweak these a little bit. Some of the parameters may not be exactly available on the Thinkorswim software, but usually you can tweak them just a little bit like we did on some of those parameters. Furthermore, you can add more. We added some technical parameters on here to try and incorporate just basic, not significant, but not extensive, but some basic technical parameters into your general fundamental look at these companies in the goal to find these good companies that hopefully will continue to go up. Remember, the goal isn't just paying dividend stocks. The goal is finding companies with the potential for growth as well, because your total returns are dividends plus capital appreciation there. All right, everybody. Thank you very much for joining me. Cam should be back next week at this time. In the meantime, coming up next, we have Trading the Trend. I want to thank Kevin for helping me out in the chat today. Also, just a reminder, subscribe to the Trader Talks channel on the Schwab Trader Talks channel on YouTube. We have a lot of different topics we cover each week. Options, futures, stocks, trading, investing, kind of a mix. And so by subscribing, you'll see the content that you want there. And if you like the session, go ahead and click on that thumbs up, that like. Otherwise, everybody have a nice day, a nice 4th of July as well. We got a holiday weekend. Markets aren't open tomorrow. We have no live webcasts tomorrow. Of course, you could always hit the archives on our webcasts as well. But everybody have a wonderful rest of the day, and we'll see you later. Bye-bye, everybody.